Thank you.
Thank you for your thought. Let's turn to business now. And Tolu, you look really good under this light.
Thank you so much. You really need to look good. It's the first day here from the Co-Atlantic studio.
Absolutely.
You need to look
you have to look the part.
All right, thank you so much. Well, let's tell you that Nigerians have been asked to continue to support the policies and programs of President Bola Tinubu. And according to an economic report from the Center for the Promotion of Central Bank of Nigeria, beg your pardon, money flowing to the Nigeria's Federation account grew to 6.86 trillion naira in the third quarter of 2024. This represents a 7.48% increase from the previous quarter. According to the Apex Bank, the extra money came mainly from increased company taxes and VAT, that's value-added tax, with most of it from the non-oil sources, which brought in 5.56 trillion naira, while oil revenue declined 24.72% to 1.30 trillion naira compared to the previous quarter. From the total 6.87 trillion naira collected, the state government shared 3.92 trillion naira among different levels of government. The federal government got 1.27 trillion naira, states got 1.36 trillion naira, local governments got 99 billion naira. Oil producing states received an additional 30 billion naira, that's through the 13% derivative funds. And in more news, the Securities and Exchange Commission says it will intensify efforts to eliminate Ponzi and pyramid schemes, thereby fostering an environment for genuine investment opportunities to thrive in 2025. Director General of SEC, Mr. Mitomi Agama, said this in his New Year message to the capital market community. He said protecting investors remain a cornerstone of the Commission's mission. The SEC DG said the Commission would prioritize key initiatives aimed at deepening market integrity, enhancing investors' confidence, and driving economic growth. According to him, SEC is positioned with a dual mandate in regulating and developing the capital market in Nigeria. He said the Commission's top priority in 2025 would cut across the dual mandate, mainstreaming the Nigerian capital market into the economy, which remains very vital. The Director General added that to resolve capital market disputes efficiently and fairly, the Commission is focusing on enhancing the operations of the Investment and Securities Tribunal. Well, shares markets were mixed in Asia today ahead of a week brimming with economic news that should undermine the relative outperformance of the United States and support the dollar ongoing bullish run. Market seems to have priced it in and might welcome an election to clarify matters. So the United States dollar dipped 0.3%. MSCI's broadest index of Asian Pacific shares outside of Japan gained 0.6%, having lost 1% last week. Japan's Nikkei returned to a holiday to drop 1.8%, pressured in part by the rising JGB yields to the highest since 2011. South Korean stocks rallied 1.6%, though the fate of President Yoon Suk Yeol seems no clearer. Chinese blue chips dipped 0.1%, even as a survey showed services activities expanded at the fastest pace in 7 months in December. Eurostock 50 futures added 0.3%, DAX futures 0.2%, FTSE futures is 0.1%. Futures of the S&P 500 and Nasdaq were barely changed in light volumes. Now, airlines in the United States canceled more than 1,300 flights on Monday after a winter storm brought snow, ice, and freezing temperatures. According to flight tracking website FlightAware, a total of 1,306 flights were canceled and 414 flights were delayed. Southwest Airlines canceled 264 flights, followed by American Airlines, 176 flights. Carriers including Southwest, American United Airlines, and Delta Airlines issued travel advisories warning about the impact due to the storm. Recall that the Federal Aviation Administration had warned of gusty winds, snowfall, and some freezing could impact travel in the Northeast and Mid-Atlantic regions. Now to China, where services activities expanded at the fastest pace in 7 months in December, driven by a surge in domestic demand. But orders from abroad declined, reflecting growing trade risk to the economy. According to the Kensington S&P Global Services Purchasing Managers Index, which rose to 52.2 in December from 51.5 the previous month, the growth pace was the fastest since May 2024, surpassing the 50 mark that separates expansion from contraction. On a monthly basis, China's economy has struggled over the past few years, weighed down by weak consumption and investments and property crisis. To revitalize the fluttering economy, authorities included fiscal and monetary measures in recent months. The survey also showed the new business sub-index rose 52.7 in December from 51.8 in November. However, new business inflows from abroad fell from the first time since August 2023. Japan services activities expanded for a second straight month in December, buoyed by solid demand and business expansion. A latest survey compiled by S&P Global Market Intelligence shows that Purchasing Managers Index grew by about 50.9 in December from 50.5 in November, lower than 51.4 but above 50.0 threshold, separating expansion from contraction for a second straight month. Economist at S&P Global Market Intelligence, Mr. Usman Bati, says that December data revealed a positive month for the Japanese services sector, with sustained rises in both business activities and new business. The sub-index of new business rose for the 6th straight month in December and hit the highest level in 4 months, led by acquisition of new customers, especially from the domestic market. Business sentiment stayed positive in December, although the level of optimism softened slightly from November. Well, crude oil prices slid today amid strong U.S. dollars concerns over sanctions and ahead of key economic data by the U.S. Federal Reserve and the U.S. payrolls later in the week. U.S. Texas Intermediate crude fell to sell for $73.68 per barrel, with a downward decline of 0.38%. Brent also experienced a downward price decline of 0.39%, selling at $76.21 per barrel. Bonnie Light sells for $78.62 with a downward price review of 2.84%. And for the OPEC basket, dealers are offering $74.93 per barrel with an upsurge of 0.46%.